Good morning, Bettina Reed with Home Life Benchmark Realty. I'm here with Indra Mathur with Bayfield Mortgages, and I was just wanted to clarify a little bit more about the changes coming in next week. I understand they're actually already basically in effect now, are they?
The changes actually go into effect on April 19th, and these changes have been brought around by CMHC, which is the Canada Mortgage and Housing Corporation, for pretty much the way that you're getting approved for a mortgage now is going to change for anybody who's self-employed or who's looking for a fixed or a variable rate mortgage. Some of the changes that are coming around is that CMHC has looked at any of the 1 to 5 year terms, and before the qualifying for any of the terms was based on the rate that you were receiving for that mortgage. So if you were receiving a variable rate, a 5-year variable rate, you used a variable rate to qualify, and currently that's around the 1.75 mark. So you'd be qualifying around using a 3-year posted rate, so which is much lower than a 5-year rate, and you'd qualify. Right. So what was happening was a lot of people were getting qualified under that program, right? That may not have been able to afford the payments later on in time, right? Should the rates increase as they are now. But so what they've kind of done is to standardized the way everybody gets approved and with the rates that people are getting approved at. So if you're applying now for a mortgage that's anything less than a 5-year term, so 1 year to 4 year, plus the 3-year variable rates and a 5-year variable rate, we're now having to use what's called a benchmark rate, which is based on the Bank of Canada is going to be posting a rate on their website, which is www.bankofcanada.com. You'll be able to access that and see what the 5-year rate that they're going to that is going to be used to qualify every individual is going to be. What that does is that kind of puts, doesn't matter who you use to qualify, it gives you the same dollar value that you're going to qualify for. Right? If you're looking for a 5-year mortgage, you are then going to be qualified at the 5-year rate. Okay. So the rate change only affects anybody who's looking for a 1 to 4 year term mortgage, or a 3-year variable, or a 5-year variable, or any variable rate. Right? Now, the key thing is that although you may get qualified only for a certain amount, right? Your contract rate, the rate that your mortgage payments are going to be based on, and the amortization and everything is going to be based on the actual rate of the mortgage, depending on what term you choose. So that is where the advantage is going to be in having a number of lenders to select from.
Okay, and so I think we were just kind of talking before about so CMHC is the one that's brought in some of these rules, but Genworth is not going to be having the same sort of guidelines?
Genworth is the other insurer that's available out there. So we've got 3 insurers available. You've got CMHC, Genworth, and AIG. Genworth is one of the other players who is insuring a lot of the mortgages out there. Currently, they haven't made any changes to their program. So one of the advantages is that if you're going to a particular institution, with that institution, they may only use CMHC, so you fall under their CMHC guidelines as far as qualifying. If you're going through a broker, you then end up having the advantage of looking at all the different lenders that are out there. So a broker should be able to help you in looking at, okay, if this is the product that we need to use, then which lenders using Genworth where you'd be able to qualify under that product.
Okay.
Right? So there are ways that things can be done right now. This just depends on the deal itself and the strength of every applicant.
Right. And now, so investors, they're the others that are affected in this sort of
Investors are affected if anybody is looking for an investment property, so that's other than a second home or a vacation home. Okay. So this is for investment purposes only. They are then going to be subject to a minimum 20% down payment on your purchase.
And there's no other guidelines for them, it's just the 20%?
It's the 20% down, and then also falling under the criteria whether it's a 1 to a 5 year.
Okay.
Right. There is other criteria as far as the number of properties, so the debt servicing, also the amount of rental income that can be used as an offset.
Right.
Right.
Okay.
But again, that's something that it's going to vary for every different individual.
Okay.
Right. You're looking at about a 50% rental offset. Right.
It used to be more than that.
It used to be more than that. Right. You're looking at about 50% basically of your rental income can be used. Before it used to be up to 80 or 90% again.
Okay.
Yeah.
So that makes a big difference if
It's-
somebody's buying a house with a suite or something that they're hoping to have that as.
Exactly. Now, again, with a suite, you got to be careful because if it's a legal suite, then CMHC is willing to accept the suite income.
Okay.
If it's an illegal suite, then no, CMHC will not accept that
Okay.
income. Yeah.
Okay. Good information.
So which is important. So if you're looking for a home that you're hoping to qualify or use that suite income to help you, again, we have to look at the entire situation and see who the right lender for you is.
Of course. Well, thank you very much, Inder. I appreciate you coming in and talking again today. And if you'd like any more information from Inder, please visit his website at
www.iamapprovedmortgages.com,
or you can give him a call at
604-516-9599.
Great. Thank you very much. And if you have any other questions for myself, you can always send me a message at bettina@homelifebc.com or visit my website www.bettinareed.ca. Thank you very much and have a great day.